Good morning, good afternoon, good evening, everybody. Welcome to this episode of the Note Closer Show. As always, Scott Carson, your host here today. Hopefully you're doing well. It is another wonderful day here in Austin, Texas, and we hope everybody out there across Note Nation is having a great day as well. When you're either watching this, listening to this, or catching the replay, we hope your day is going well for you. Today's episode is a little bit based off a conversation. Actually, I just got off the phone with one of our investors talking about the Zig and Zags and how everything changes over the years. And so that's what this episode is all about, because you have to evolve with the market. You have to evolve with the times. And sometimes history repeats itself. Sometimes you're going along the road doing one thing and suddenly you've got to switch. I kind of call it Zig Zag Investing. You got to, duck and strike, duck and, duck and cover a little bit in your real estate investments out there, because let's face it, the market is changing. And I think back to, thinking back to when we got started in the note investing game, back 2008, 2009, 2010, and the whole run up, through 2000 and, the last few years, 2015 for sure, is a lot of us, especially when I was traveling, teaching workshops across the country with, we'd have 50, 100 people at a workshop. Everybody kept asking me, when is the market going to change? When is the market going to end? And, we would have Joel Markovitz there. We'd have Val Satir. We'd have Jack Krupe. We'd have Mark Gold. We'd have others that would show up from time to time, like Brett Palumbo. We always kept saying we thought it was like a 3 to 5 year market. Who knew what would happen? Well, it was longer than 3 to 5 years for sure. But the market has changed. I mean, the market's changed a couple times. I think back to the different things that I have done in the last couple of years. And when you see the market increasing in value over time, that affects a lot of people. I think the first round of people that had to really do a lot of zig and zagging there were people investing in seconds. They had to zigzag because when you have equity increasing in a property or values increasing, and it overcomes it gives you equity now versus being over encumbered on a second lien position. You can change, but that means the pricing has gone up. And, there was less of them being created, especially in the junior lien, second lien positions than there were in the first lien since the beginning, for the most part. I mean, especially the last 10 years, there's been a lot less originated than what was done previously back between 2004 and 2010. So that's one of the big zigs. Got a zig with that. People that were doing a lot of short sales had to zigzag because there were less of those assets available. Those that were marketing to the foreclosure lists had to evolve and change things because there was less foreclosures. I mean, you look at some of the different counties, especially here in Texas. I was talking to somebody the other day here about Travis County. I can remember when there's 500 plus foreclosures each month here, and now it's down to like less than 20. So if that's what you are seeing out there, or you're seeing less results from the things you've been doing, or you see a lot of people playing in your space, you either got to zig or zag. If you keep doing the same thing, you're going to have difficult times. And this is kind of like, I talk to people too, other investors out there like, oh, I just bought from Condor, or all I bought was from Granite Loan Solutions. Okay, well, if those were your only sources when everybody else found them and flocked to them and started buying from them, and you were getting outbid or you were complaining about pricing being too expensive, you had to zig. All right, you got to zag. When people complain, oh, there's Scott Carson at Speed teaching too many people, prices are too high. You got to zig. You got to zag. If you're just going to sit there and be stubborn in that market to move or to go find assets in other areas, you are just going to get run over by everything. The crowd, the flock. And let's face it, a lot of us real estate investors are like cows. We're going to flock to one area, we're going to flock to another one. You have to evolve. And I think about the markets that I have invested in the last couple of years. That has changed. I mean, I used to be high on God's waiting room, in Florida. Bought a lot of stuff in Florida the years. I haven't bought anything in Florida the last couple of years because I think most of it's been overpriced. Okay. Or the stuff that I did see just didn't make sense for me because that market has rebounded strong. So I had to evolve. If I stayed where I was just buying in Florida, then I wasn't buying a lot of stuff unless I wanted to go trying to door knock or take over subject twos. I was talking with a real estate investor. I'll mention his name. And we were talking about the note business and talking about some other things, especially in the Florida market. He's like, oh, that's all I buy is in Florida. I'm like, okay, have you changed your business model? I said, Or have you just slowed down and buying? He goes, well, I haven't bought much stuff in the last 12 to 24 months. I'm like, it's because the price has gone up. He's like, yeah. Is it because you're not seeing as much stuff? He goes, well, we're still seeing some stuff. We're still doing some originating. I'm like, that's great. But it's not the same thing as if you're buying the non-performing stuff out there. And markets have changed. I mean, Texas, it's always been expensive here. California, where we used to see some stuff there, don't see really anything out there. That means we evolved. In the last couple of years, we bought a lot more contract for deeds as a note product versus the traditional first liens, just because there was a lot of it available. So we went there, we started buying before, there's a lot of crowds that are going there now because they realize, that's not a bad product. Sometimes when people are scared of a specific product or niche, that's a good thing to be in, as long as you understand it and you develop and build your markets, you build your teams, you build, your business model around that new niche. Same thing comes with what we've seen in the market out here. When you start seeing educators come out of the woodworks, and I crack because I see Larry Hobart and our buddy Tyler Sheff from the Cashflow Guys podcast had an episode on that. Kind of cracked me up. I agree to that. There's a lot of people that are, we're weekend warriors. We're going to teach everything now. Okay, great. That's awesome. You're still working a full-time job. That's great. You can't teach. An employed person, unfortunately, I'm sorry, an employed person cannot teach a self-employed person how to be successful. Why is that? Because they have different needs. A self-employed or an entrepreneur needs to learn from another entrepreneur. Because as long as that person who has a job, still has a job, they have a safety net. It's a different mentality when it comes to making offers. It's a different mentality on the urgency. It's a different mentality how many bids you got to get place in to hit your goal for the year anyhow. And I'm not minimizing the knowledge that people that are working full-time still have a job are doing. What I'm talking about is it's just different things when it comes to services and vendors and what you're doing on a day out basis. If you're working full-time, you may only have 10 hours a week to put towards something that you're working on. But if you're unemployed, if you're self-employed or an entrepreneur and you have 40, 60 hours, what are you doing in that 60 hours? It really can't be taught by somebody. Somebody who's got a $17 employee on the phone can't advise somebody who's a $0 employee hour who's trying to make it in this world. Well, the worst thing that you can do is if you are working a full-time job is take advice somebody to quit. No, don't quit your job until you have your systems in place, your cash flow in place, of really having things, in place to rock and roll going forward. And I see that happen a lot. I see somebody who has a different job trying to educate people on something. And I'm sorry, yes, you can teach some nuggets. You can teach some basics. I get that. But when there's a million different things going on, a million different workshops, a million different things, it breeds two things. One, people aren't buying stuff that they should be. Okay. Or that specific area is oversaturated. That's why you've got a zig, you got a zag. I've zagged several times. We went from I've always thought we were kind of ahead of the curve a little bit because we went from, buying in Florida when nobody else was buying in Florida for the most part. And then we moved from that to buying in other states like the Carolinas or South Carolina. We zagged there and then started buying in Indiana when other people weren't. Then we zagged to buying in Michigan and Ohio when a lot of other people weren't doing it. We zagged when we stopped doing hotel workshops, doing online workshops. We zagged when we focused on our mastermind or we zagged with our coaching, going from in person for 4 days to 8 weeks of webinars with people to our fast track. You have to evolve your business model to make things different. We've zagged recently here in the last 6 months of being really focused on the podcast and me speaking other people's podcasts. When you start seeing things different, you either have to increase your marketing or you have to find alternative sources to make things happen. A lot of people are talking about, man, I have been using Facebook ads to market, and now it just seems like it's not seeing nearly as much traffic. And it's not. You're not going to see as much traffic with Facebook ads. That's why I don't spend hardly any money at all on Facebook ads unless it's something very specifically that we're doing, because the price has gone up. It's become totally doesn't make sense a lot of times. And then also the algorithms with Facebook controlling how many of your followers or friends see your stuff, which I think is kind of crap. If they only allow 10% of your audience or 5% of your audience to see exactly what you're talking about or see what you're sharing. Uh, the thing you have to realize too is if you don't change your marketing, you don't change what you're focused on. Like people have gone from sending out thousands of postcards now to yellow letters, or going from that to back to door knocking. And the history repeats itself. I see people door knocking now, I kind of crack up because a lot of people won't do that. They're too scared to do that. But the hustlers that go out and do that, as long as they're being safe, I would not always recommend it for everybody in every neighborhood. But what you have to realize is everybody has to evolve, or you're going to evolve out. All right. Now, there was an interesting article that came out in USA Today about how they found another offshoot of us Homo sapiens in some cave in India or some other place, where they were like hobbit, like 3 foot tall people. Okay. A cousin of ours, as you could say. Well, they eventually died off because they didn't evolve. They didn't leave. I don't know whether they lost their food source or stopped breeding. But that's the thing. You have to evolve or die. You have to zig when others are zagging, or zag when others zig. Okay. You have to go out and do things differently. This is why we harp on so much with our marketing aspect of things, especially when we're talking with people at our mastermind or through our fast track training. That's why we go, hey, here's a variety of ways to go out and locate deals. Here's a variety of ways to do it. Sometimes you just got to pick up the phone and start dialing for dollars. I know people don't like that. I mean, as technology has evolved and sources, yes, you've had more listing websites like Madison Management's sales portfolio platform, or you had Watermark Exchange, or you did have Granite or Condor, or you've got like PaperStack. You have to evolve to keep up with the market. Because let's face it, that market, it's constantly changing. It's constantly evolving. I see this on a regular basis. I see this is what we, with the things that we do, things that have been working great, and then other things like, well, it's not so much working anymore. We got to, are we going to keep putting money or time into this thing that's not working, or do we need to evolve and put into something that's working? You know, sometimes it just doesn't make sense. I mean, when you start seeing so many and over and over and over again different workshops coming up, I mean, there's a few staples out there that I mentioned yesterday on our previous podcast about, this just over flooding of events. That doesn't make sense. You don't want to be the 15th or 20th person doing something. You want to be in the top 2 or 3, or maybe number 1 doing something different. You have to evolve differently. I think that's one of the big things that's helped us out tremendously. Now I'm starting to see more people doing online events because they realize it's working, and not many in the note space. We've had a couple that people have done one online event and then never followed back up with it. Okay. It is what it is. People just don't put the seriousness. Maybe they don't see the impact of it. I look at our friend Ron Happy, who did NoteCon. They did it once and then didn't follow through with it. They did it once where they pre-recorded everything, and it was over 2 weekends of pre-recorded webinars. And I just don't think that works, because you just don't have that live interaction. People don't feel that connection because it's recording. You want to try to capture their questions when they're on live with you, not doing a recording aspect. You might as well just knock it all out in 1-2 days. Same thing. I saw it with Troy Fullfoot. He did one online summit and nothing since. You have to realize, everybody, that as technology evolves, as we get smarter and our attention spans get shorter, and things get more expensive to travel, it gets more expensive to put on events. You have to evolve with the times. You have to evolve with what's going on. And there's a lot of real estate investors out there trying to do the same thing as beforehand. And it's not the same. It's not the same market. Each state is going through different things. Market values are changing. Dallas is different. Austin is different. Houston's different. All right. You got to look outside of your backyard in some cases. Like when I spoke in front of the Quest Trust Company the other night, a couple weeks ago, for their $1 trillion investment mixer, I asked a question in front of the audience, and I want to put this out there to everybody that's listening here in Note Nation out there. How many of you would buy a deal an hour away? Now, for some people, that's just like South Austin to North Austin, or South Dallas to North Dallas, or South Colorado Springs, North Colorado Springs, okay? Or South Vegas to North Vegas. I mean, you get what I'm saying. Most people is like, yeah, I'll do a deal with an hour. Well, what about 2 hours? For us, that's like the distance from here to San Antonio. All right? Great market. Some people are like, oh, no, I wouldn't do it outside of 2 hours. Okay, what about 3 hours away? And some people, oh, I would do 3 hours. I'm like, oh, really? You wouldn't invest in Dallas or Houston from Austin, or invest 3 hours away from you, or 3 hour radius? No, no, no. I'm like, that's unfortunate, because if you can't find deals in your backyard, no matter what market you're in, for the most part of us, especially if you're here in the central part of the country, I'm basically 3 hours from each coast. I can jump on a Southwest flight right now, and in 3 hours be either in Tampa or Jacksonville or Miami or DC, Baltimore. I can fly north to Chicago. I could basically be in San Diego, Vegas, Denver. A little bit north of that. I think it's like 4.5 hour flight to Seattle. So not quite that aspect of things. But what I want people to realize is your market's a lot more than just what you can drive to. Now, some people are like, oh, I got to go out and touch it. Okay, great. If you're going to go out and touch it, you better get used to flying Southwest, because Southwest is still pretty cheap. You can still jump on a plane and go out and fly back that next day for the most part, or fly that same day in some cases. Fly out early, fly back at night. You've got 8 hours to drive around, look at assets, put team together, things like that. If you coordinate things, you can make this happen. And that's what many people probably need to be doing, is if you're in an area like Austin or other parts of the country, they're just overpriced, or the price to get in is just exorbitant, then you have to start looking at other areas. Like, I know a lot of people from California for years have been looking east. That's why Vegas, that's why Phoenix have boomed so well. Okay. It's also why you see Albuquerque in New Mexico doing well, Denver booming. Denver's always been a pretty good market, but you have a lot of people from the West Coast who are coming forward. And those that went a little bit further, like to Missouri, like to St. Louis or Kansas City, in that area, have done well, or to Indianapolis. Okay. You start seeing this wave of people moving to find deals. They're going a little bit further. I kind of call it the whole like boomer sooner aspect of things. It's the great West migration that the United States went through in the 1800s, where people were moving west to try to find and make a new name for themselves. Yeah. It's kind of that same aspect here as real estate investors, as note investors specifically, is you have to be looking, I won't say necessarily going west, okay, but looking east. You have to look in different markets and different ways of finding things. You have to evolve. You can't keep drinking the same thing or eating the same thing if the lines are getting short. You've got to switch things up in your business and your marketing and your focus. Maybe you need to go commercial. Maybe you need to quit looking for multifamily deals, that beautiful thing, and start looking at buying some distressed notes. We're looking at mixed use, or going to smaller units versus a Class A 100+ units. I laugh, but one of the biggest things I can tell you right here, right now, if you're a real estate investor who says you specialize in everything, you specialize in nothing, actually. By saying I'm this, and this, I specialize in all these things, you really you scream joker, broker, or jack of all trades. And a jack of all trades is a master of none. Like, anybody should know that by now. Okay. Now, where do I see things going? Let me pull out my crystal ball here. And from when I'm talking to people, because I'm constantly trying to keep my ear to the ground, I think when the market turns south, as we're already seeing in a few markets, I think we're seeing where some people keep talking about, oh, the market's great, the market great. It can't keep going up. It just can't. It's got to change and turn south at some point. And we're already seeing that parts of area. I think Miami's going to be hit hard. I think Dallas is going to be hit hard. I think Denver's going to be hit hard. I think there's parts of California. I don't think San Francisco is going to be hit hard, because I think there's just too many people, too much money out that neck of the woods. And I think there's going to be a bit of a blip. I think San Diego's going to get hit harder than San Francisco. LA, I think, will do okay. What's going to happen there is I think you're going to see Phoenix and Vegas take a bit of a hit as well. Now, I don't think you're going to see too much of a hit in sub $100,000 assets. I think the low price stuff is going to still continue to do well and be strong. It's your higher echelon houses, your $500,000 homes or greater, because those are dragging out. Okay. You're going to see those drag out. Days on market are already starting to increase in those properties across the country. Looking at it. I think it was CoreLogic came out with some new numbers yesterday that our default rates are still are less than they were a year ago. Our 30-day defaults are down. Our 90 days are right at the same. You know, that's great. That's great. That's awesome. I'm interested to see what happens once more of these subprime lenders, or non-prime lenders, I should say, start seeing their default rates start to kick up a little bit. I think that's going to be the biggest thing. And then charting that is one of the biggest things that you have to do. We've gone back to charting those. We're going back and looking and targeting a lot of those investors, or not those investors, sorry, those funds that are on the origination side. If they're selling all their stuff off, and a lot of them are selling their stuff off to some of the bigger banks out there, to Wall Street. Okay, that's great. Fine, they may not hold on to that paper. That's totally fine. But somebody's going to have to hold that pie. Somebody's going to have to hold that hot potato, that hand grenade with the pin pulled. And where does it end up? Does it end up in Wall Street again? Does it end up in insurance companies? Does it end up with us? All right. Are you going to see an increase in FHA, Fannie Mae foreclosures and HUDs again? Probably so. But I don't think that means you're going to see REOs. I think they're going to continue to sell the assets off in portfolios like they've done. They've learned. They've zigged with the zag. Instead of trying to sell up individual ones, they sell the pool of notes off. People come into it. I think there is opportunity. Here's where I think the biggest opportunity lies in the crystal ball that I see. I think the biggest opportunity lies in those that are going to take the time to reach out to the funds that have bought these portfolios over the last couple of years from Fannie and Freddie, who've already exceeded their 12-month period of working out the loans, of trying to avoid foreclosures. And they're selling that chunk of the assets off. They've made their money back the top 25% of the portfolio. They're making their profits on the middle 50%. There's still that bottom 25%, 25%, which some people say, oh, that's the dregs, that's the bottom of the barrel. I still think there's opportunity for local investors, because if you can get that stuff at basically pretty cheap, then you have the opportunity, that if you know what that property is worth, you know what that true market is, you have a little bit more flexibility being a boutique investor than you do some big company who's got a huge overhead and has to focus on specific numbers that they've got to hit. The minute those assets aren't going to hit those numbers, they're going to look to move this. And I think that's the big opportunity. If you start checking and tracking those companies that bought those large portfolios, and I'm talking about Goldman Sachs too. Goldman Sachs bought a bunch of stuff off. They're at the point where they're probably going to start moving some of that stuff off their books if it didn't fall through. Now, they've got a unique position of being able to get dollar for dollar, a discount off of their big $1 billion fine for every dollar that they forgive in loan modifications, that's rigging the system, I believe. That's giving Goldman Sachs basically free money to get them out of. I wish we would have that deal as investors, but that's not the case. But anyway, tracking the entities that are handling that aspect of things, and it's seeing what you have to do to get buying in there. I think you're going to see some buying clubs. I think you're going to see some people coming together to buy in bulk, which I think there's some opportunities there. But I believe, and I hate to say this, but I believe that the hardest, the people are going to hit the worst in this change over the next 6 to 12 months are going to be your smaller investors that are trying to get in the market. I think it's going to be the day of the people buying one-off, two-off deals for the most part, and something that actually makes sense. I think it's really kind of dried up. I think you've got to come back to the table where you've got to have $500,000 or more in private capital to really buy something that makes sense to get a discount. I had an exchange with an asset manager a couple of weeks ago. He's like, oh, I can sell this stuff at 80 cents on the dollar. I'm like, if you can sell it at 80 cents on the dollar, by all means, go right ahead. By all means, go right ahead and do it. That's the way it is. Great, go ahead. I'm not going to sit here and hold my breath and close on a deal that I think is overpriced because you think it's worth something. That's fine. It's totally fine. You have to realize, everybody, though, there's a lot of funds that are smoking a lot of crack out there right now. And you have to, leverage yourself differently to the point where, hey, buying one asset at a substantial discount isn't really going to play well. You have to realize you've got to do something different. That means probably buying more assets to get a discount. Buy some of the dregs to get a discount. All right? You've got to do something a little bit different than what you were doing 6, 12, 18 months ago. And a lot of people are getting excited about buying portfolios of contract for deeds. That's great. You've got to evolve now. What does that mean by evolving? You've got to change the marketing that you're doing. What does that mean? Well, that means you, got to find different sources. Maybe you're pulling assignment of mortgage lists from the county clerk site and looking to see what's bought and been sold, what's been bought and been sold there. Maybe you're pulling, maybe you're pulling asset manager lists and then dialing for dollars, making those unique connections. Maybe you're calling the subprime niches and finding out who they're selling to. Then calling those buyers to see what's going on with them, all right? What you have to realize, everybody, is this is a different market. It's a different ballgame, all right? This is going from, you've gone from being in Pop Warner to junior high to high school to college. Now, if you're trying to be in the pros with a variety of things in the note game, hey, you better expect to put your helmet on, tighten up your chin strap, and be focused on getting some things done. You have to market more than anything else. And our buddy Dan Zatowski posted something the other day that people are like, oh, I can't find deals, or I can't raise capital. I don't know how to go about that aspect of things. And when it comes down to more than anything else, it becomes a fear of marketing. It becomes a fear of marketing. And those investors, I think, that know how to market themselves, whether it's using Facebook or LinkedIn or video or direct messaging through different variety of things, or knowing how to use Facebook custom audiences to target people and avoid having to use expensive Facebook ads or Google AdWords. I mean, there's things that at some point you're going to have to evolve into the 21st century. Okay. You're going to have to evolve and realize it's a new generation. All right. Let's try that again. That's right. That's Scotty's here to beat me up on that stuff. So that's what the thing I want you guys to focus on. And be honest with yourself. Now, if you haven't made a lot of offers, okay, you don't really know where to begin. If you're making a lot of offers, that's really the only way to get to find out where you're at. If you're making a lot of offers and things are getting countered back high, or you're seeing things selling that doesn't make sense to one-off investors. I think a lot of one-off investors that bought assets are overpaying for some stuff are going to be the ones that you can end up buying that stuff back cheaper later on. I think you're going to see a lot of that stuff happen next 6 to 12 months, especially if people are buying houses as investments and then suddenly the market turns south on them through a variety of reasons. You're going to be able to pick up some stuff relatively cheap. I think we're going to see that in the apartment complex. People overpaying for assets thinking they can get cashed out, refinanced out in 3 years with traditional financing. I don't think that's going to work. I think you're going to have a lot of people that are going to be hurting it. Now, I could be wrong. I've been known to be wrong. Maybe, but if that's not your strategy, you're going to just keep using other people's money, and that's fine. And you're looking to sell the asset off. That's great. It's totally fine. Just got to be prepared. What happens if the market turns south again? What happens when things dry up in your specific little niche or your market, your backyard? Are you still considering banging your head against the wall, trying to get things done? Or are you going to evolve? Are you going to zig and zag? If you've seen everybody flooding an area, it's time to pull up your tent and move to a different area. If you then fly into that area, then it's time to pull up your tent and move to a different area. It's important. And if you have to realize that if you are number 100 going there, you're probably behind the 8 ball already. If you're number 1, 2, or the top 10 or something like that, something brand new out there and you're seeing success, hey, keep knocking it out. Buy as much as you can when you're getting stuff at a discount. Do the things that you need to do. Those that market themselves more than anything else are the ones that are going to end up having deals sent to them and have to do less work versus those that don't market. If you're sitting there still relying on others to send you stuff versus going out and finding your own sourcing, okay? If you're the one going out and finding stuff, you're in a much better position because you got stuff built in. You have the ability to turn that nozzle on or turn it off as you go. But if you're one of these reactive investors, you're going to be really kind of priced out of the market. This money right now is pretty cheap. Okay. That's great. You may want to be a lender. That's the thing we always see too. I was talking with, what's his name? Daryl Dyke from Noble Mortgage Company, seeing all these hard money lenders showing up trying to make money on hard money lending. And that means cheap money. It means cheap money. I've seen some hard money lenders who have pulled their funds out because they're like, we're not going to drop below this. We're going to focus on our acquisition side of things and let that evolve, let that grow versus lending the money out for little things. And I can understand that. Evolve, everybody. If you're not evolving, if you're struggling right now, look at what you're doing. Are you trying to do the same things that you were doing 6, 12, 18, and 24 months ago? If you are, and you're not evolving, or you start putting new feelers out to do things, you're going to be hurting the next 6 months. And some people are like, well, Scott, where do I begin? How do I get started? Well, the thing you got to look at is, okay, where are other opportunities? Where do other opportunities lie? Commercial note space is great. Residential note space is still great, but you've got to do things a little bit differently. I have to give a big shout out to our buddy Joe Tomko out of Pennsylvania. On the phone, dialing for dollars. Yesterday called me up and said, hey, I got a bank that's sending me a list of residential commercial notes they're looking to sell. I said, great. How'd you get a hold of them? Because I just dialed and followed up. I'm like, great. And they're a bank that has never sold loans before, but they're definitely interested in doing it. So he's actually building a relationship with somebody who's never sold before as a way to help them. So I'm like, that's phenomenal. You're ahead of the curve there. That's a great source. Don't give up that source. I said, you don't have to tell me, don't tell me who it is, but that's phenomenal. Here, send them an NDA. Let's make it look good for you to help you walk you through the door on that aspect of things. And so he's pretty jacked up about it. I would be too. That's where I think the biggest strength is going to be in the next 6 to 12 months. Those that are calling the banks, those that are identifying defaults, those are looking at banks or lending institutions who are having some defaults, and then reaching out to them directly and just being consistent in your follow-up. Consistent in sending an email out the first of the month. Consistent in sending another email out to those that opened that email up a week later. Consistent in sending an email to those that didn't open the email 24 hours to 48 hours after you sent the first email. There's a system to your marketing that you need to be doing. And if you're not doing this on a regular basis, and I guarantee less than 1% of probably note investors are sending emails out to asset managers. Even less are making phone calls to banks to talk to them. Just people, let's just face it, most people are lazy. They want to listen to them. They don't want to do the heavy lifting. If you're not going to do some heavy lifting now over the next 6 months, you're going to be on the sidelines wishing you were in the game, wishing you got started ahead of it and being behind the 8 ball. I think that's the big thing that's helped separate us is we're constantly willing to zigzag, and we keep evolving, keep finding new ways to do things, keep finding ways to make things happen. And that's one of the things that we're pretty excited about with our mastermind here in a couple weeks in Austin. Pretty stoked about it. We've got a great group coming together, and that's one of the big things we're going to talk about is zig and zag. Zagging when you need to zig and zig when you need to zag. And identifying those other opportunities in the market, those markets, those lenders, all sorts of great things that we believe are going to lead to helping finding deals and staying busy, productive, and profitable in the next 6 to 12 to 24 months out there. So lots of things, lots of moving targets. One of the things I would highly be looking to do is one of the things that we have been doing here is we have been tightening up, getting rid of things, getting rid of some stuff. I have to thank Steph for this. Specifically doing a lot of the, hey, look at me, hey, what's this charge for? What's this charge for? What's this coming out? Can we cancel this? We don't need this anymore. No, we don't need that. Let's get rid of it. We're not using it. I think everybody does that. Everything signs up for using something. If we don't get into using it, you forget about it, and then it just keeps tagging. It's like a gym membership. If you're not using some things, it's time to move some of the stuff off your portfolio, off your bank account, and start using that money wiser. It's also part of the reason we've been tightening down our budgets and traveling less out to different events. If it's not going to be a productive event, can I leverage my time to be here in Austin? Can I leverage my time to kill two birds with one stone, to get stuff done in my time? For a lot of you from your 7 to 2, you gotta be smart. There's a lot of people that are right now either flying out or in Las Vegas right now for the Paper Source Convention. Great event. There are also people going out to the Laughlin Associates event for the Magnify Their Wealth Summit. I think that's a phenomenal event to go to. Great capital raising events, great places to meet and greet two people. But what you have to do, you have to be aggressive when you're at an event that you make it worth your time. You can't be somebody who's introverted, who doesn't talk to people. You got to get off your keister, get off your rear, and go talk to people. You've got to get out and meet people, shake their hands, take business cards, share what you're doing, and really provide some great content and just a resource to people. Build your database, build your network, find out what they're looking to get, because everybody is a buyer, a seller, or a funding source. It's those three things. Everybody's either got assets they're buying, or assets they're selling, or they've got money, or know somebody who's got money who's looking to invest. That's one of the big things I want to leave you with. Everybody is buyer, seller, or funding source. One of those three, or two out of three, or sometimes three out of three. Everybody, though, is at least a funding source. Maybe not their funds, but maybe somebody they know, their network. So getting out, talking to people, building those relationships, building rapport. One of the great things Julian Sadati talked about, our SEC attorney, a couple weeks about, is you've got to really develop a pre-existing relationship. You've got to build relationships with these people that you're talking to. I know that they've watered down a little bit of their message with the Jobs Act, but they still want you to have and talk with people. They want you to build a relationship. Talk about the three-touch approach, not just standing in front of the audience and say, hey, fund my deal. That's illegal. You can't do that. You have to talk to people, get to know them. Hey, what have you invested in the past? What are you talking? Let's talk a little bit. Let me get a chance to know you. You know, that's the biggest thing I think people struggle with. Too many times people go to events and they sit on the sidelines and they don't do anything. They go to the RIA club and they sit in the back or the very front and they go out and network. They don't go out and network, and it ends up hurting and affecting them in the long run, in a very bad way when it comes to, having those relationships, having people you can pick up the phone and talk to, having people you can pick up the phone. Hey, I get a deal. I need 50 grand to fund on in the next 48 hours. How can it happen? All right. Best thing you can do is spend time talking with people, getting to know them, going to lunch, going to breakfast, going to dinner. Especially if you're traveling an event, you should probably be having dinner with 3 different people or having a meal, breaking bread, especially if you're brand new or kind of new to this industry. Get out, talk with people, join the conversations. You see groups of people standing around, be a bowling ball, come and get involved, elbow your way in, because everybody, especially at an event, you've got something instantly in common with them. You're at the event for a reason, okay? You have the same current concerns and things like that. And people are looking for more knowledge. They know when to zig, when to zag. All right. This is part of the reason that we have looked at different events than what we have in the past, and stopped going to a couple of events and gone to some new ones so we can learn how to develop what we're doing a little bit better. How can we market a little bit better? If you're in your home, if you're just in your home 24 hours out of the day, or 23, because you basically, you are creating your own solitary confinement. All right. You got to get out and talk to people in some sort of fashion. You've got to be speaking. You've got to be talking. You've got to be going out and sharing what you're doing. All right. You've got to be doing that in this market. Even if you're just a smaller guy, hey, get out and share what you're doing. That's one of the biggest things that helped us early on, helped me become the note guy, was the fact that I was sharing videos when nobody else was doing it. I was talking to somebody the other day, like, oh my God, you've been using YouTube for like 8 years. I'm like, yeah. We believe video is the wave of the future. And hello, everybody is going to video. Everybody's developing video. You got Facebook, Instagram, Twitter, LinkedIn is adding that aspect now. Instagram has been adding that. Okay. You have to realize that's the wave of the future. So you've got to zig. If you're not doing some sort of thing, great. Facebook is great, but Facebook, if that's the place you're marketing, only 5 or 10% of your audience is seeing what you're doing, it doesn't become effective. So you've got to cross-pollinate. As I say, you've got to get out across that web, throw a bigger web across the internet to help you market, to get the word out. I had 2 realtors come by the office here in the last couple of days. They're like, hey, I want to learn more about this note investing stuff. We're not seeing much stuff here in Austin. That makes sense. We got some money to buy some stuff in some different areas. I'm like, great. You're getting out of your backyard. That's awesome. I also, the same guy come and say, oh, I'm not going to buy anything out of Austin. I'm like, okay, I can't help you. Well, I want to fund some of your deals in Austin. I'm like, I don't buy anything in Austin. Okay. Realize, take yourself, and a lot of times we're all guilty of having a narrow mindset. We're all guilty of having sometimes limited beliefs that affect our ability to evolve, our ability to market, our ability to reach out and things. We all struggle with that. Even I struggle with that from time to time. What you have to realize is sometimes it's best just to step away or ask and get some outside opinion, get some outside counsel from people. See what others are doing in other industries that can help you move your business along or move it to the next level. You know, I laugh, I'm cracking up because there's a lot of people doing podcasts now, which is great. I think the more the merrier in podcasts. What's going to separate a lot of people, though, is those that get to the 10, they get to 10 episodes, or they then get to 50 episodes, or they get to 100 episodes, or they get to 300 episodes. That's kind of rare. Yeah, this podcast episode, I think it's like episode 440, something like that. I mean, the first 150 were Facebook Lives we did before we launched the podcast. So we're coming up on that magical 300 episode mark on iTunes. I mean, we have more than that across the board with Note Night in America and our Note Camp podcast. But we're from rare air. We've really been cranking a lot of stuff. It's helped us build a name. But that's the thing. I don't care what you're doing. If you want to do that and want to do that, you're going to have your niche. That's a different way of marketing. Okay. That's a different way of making things happen. I've seen some people different fun. I'm so excited. Like we had Gail Greenberg and Chris Savini on here with a Good Deeds Note Investing podcast. I'm so proud of what they're doing. They're sticking with it. They're getting things out. They're cranking out a couple episodes every week or a month. That's great. I saw the other day, it looked like Kevin Cordell and Shantae Duffy from Madison are doing the Madison Note Network podcast. And first one, great. Now go out and film some more. All right. I was talking to my buddy Eric Nevins. Eric is a fellow podcaster. Is a podcast called Halfway There, and it's a Christian podcast, and he focuses on Christians' journeys and things like that. And Eric called me up the other day, and he's had to evolve his business a little bit. He's like, "Hey, I need to make some changes here." He's like, "I got to figure out some other ways. I got to make some income because it's adjusting what we're doing in the church." I said, "Well, let's do this." So we talked for a half hour, 45 minutes. So on some things and how he's evolving and using some of his marketing and podcasting to make things happen. And so I want you to know, if you're going through a bit of a struggle right now, if you are feeling like you're in that kind of between phase, because I think a lot of investors that I talk to are kind of in this weird kind of limbo, or they're feeling this weird kind of uneasiness, that's your spidey sense telling you that, yeah, things are evolving. You are at that precipice where basically you're probably at a crossroads in your journey as an investor or note investor, and you probably got to take a right or a left. You got to make a different change where you're going. Now, I love note investing because there's so many different niches you can do it. The owner financing, the performing, non-performing, institutional debt, first, seconds, partials, residential, commercial, so many different states. You may have to make a change. You may need to take a left, right, or take a left or a right, or maybe you can't see the changes, the turns in the road because there's fog in front of you. What I would tell you to do is just don't stand where you're at. If you're in a tough position, you're in a tight position, the worst thing you can do is just stay where you're at. You have to keep moving forward. To go through, and I know you can't see, you may not be able to see where it is, but zigzag. Look at doing something different. Sit down, take some time. Heck, pick up the phone and call me. Drop me an email, scott@weclosenotes.com. It's scott@weclosenotes.com. And we'll be glad to talk with you. If you're looking to get started in notes, our audience out there, if you're listening and watching our podcast network, Note Family, across the country, you can always pull out your smartphone and text the word notes, N-O-T-E-S. That's N-O-T-E-S notes to the phone number 72000. So pull out your phone, text 72000 as the phone number, 72000, and the word notes. And that'll get you opted into our system, give you some great education, some videos, and a PowerPoint that you can download to get kind of rocking and rolling for you. But guys and gals, everybody that I've talked to is going through something at a given point. You are not alone, okay? Best thing I can tell you is don't stand there by yourself worrying about things. That's only going to make it worse. The best thing you can do is move forward. And you know what? You're going to make mistakes. People make mistakes all the time. Jesus, I make mistakes daily on different things. The best thing that you will find from making mistakes is you're going to learn a whole lot faster than trying to read something in a book or on a video or listening on a podcast. Great info, not knocking books, not knocking video, sure as heck not knocking podcasts, because we do all those. What I'm trying to get at is if you learn to pull the trigger, take some action, try some stuff out, learn the video, pick up the mic, pick up the video, pick up your phone, learn something new, go out, find something, because fear, if you've got fear of something, we all know what fear stands for. False evidence appearing real. And it's time. Don't let fear limit you. Let fear be a motivator to go take your business to that next level, evolve, zig or zag, depending on where you're going, whether it's your markets, your sourcing, whatever you're doing, to make sure that you make some things happen. So a bit of encouragement for everybody out there who's maybe struggling or going through something. Hey, a lot of people are doing that. A lot of people are evolving. Some of my closest friends are tweaking what they're doing to help them overcome some things. So go out, make something happen. Everybody zig and zag, and we look forward to seeing you all at the top. Once again, thanks to everybody out there for listening. Thank you for just being just great. Thank you so much for all the emails I'm getting from people that are listening. I love that. If you've got a question, comment, love to hear from you. We're getting some from our friends on Bigger Pockets, on LinkedIn, on Instagram, on YouTube. Any way we can help, please don't hesitate to reach out to us. We're glad to help out there. Once again, don't forget, guys, we have our next really kind of a major event, our mastermind here in Austin, the 26th, 27th, and 28th of April. We've got a couple sneak peek passes available for those that are interested that want to sign up for that. Let me know. And then, of course, our big Note Camp commercial. It's a 100% commercial-based note online workshop with the cream of the crop. Listen to the previous episode to find out more information about it, but you can go to notecampcommercial.com to get signed up on our extra early bird 50% off seats. Once those limited number of extra early bird seats are bought, the price goes up, so take advantage of it. Notecampcommercial.com. That's July 26th, 27th, 28th. That's an online event. So go make something happen, everybody, and we look forward to seeing you all at the top, everybody. Bye.